Welcome all you glorious degens to the node. I am Mike, aka Veteran Crypto, and with me, most of the time, he wasn't here yesterday, but
yeah, I wasn't here yesterday.
But with me, as always, is David from DeFi University, also the node. How's it going, brother?
Doing well today, Mike. Doing really well today. Hey, quick question for you. I got this air conditioning unit in the room that I'm in right now. Can you hear that? Can you hear that in the mic?
No.
Oh, perfect. Awesome. Good, man. Yeah, so dude, I'm out here in St. Petersburg, okay? St. Petersburg, Florida. And I got this place in the old Northeast, the part of, the city that I guess is like the most desirable to be in. Dude, I was showing you those photos yesterday. Yeah. This place is beautiful, man. I love it here, dude. It is really nice. And then, later on today, I'm going to be signing a lease for a place on the beach, St. Pete Beach, man. It's going to be awesome.
Like a lease or like an Airbnb or what are you doing?
No. So I just got like a beach house, for a month. And then, and then after that, man, just going to a different beach house potentially, but we'll see.
just living that DeFi life. I like it. So
absolutely.
Dude, I found all kinds of freaking juicy alpha for today. I'm hoping that we can fit it all in 2 hours. And I'm sure Nasty will say that's what she said. But let's jump right into it. So let's see, let's add you. So if you're not following us on YouTube, please come on over and follow us at @thenode_channel. Want to give a shout out to the arena for looks like we got about 13 people on there. If you're not familiar, the arena is a great up and coming, a lot like YouTube. Kind of an ex-YouTube hybrid where you can do posts and stuff like that, but you can also go live and really, really cool project, Web3 project that is being built out. And we're trying to grow there because we're all about liberty and freedom here. We're very based here, unapologetically so. Open to other points of view, but we're very based, and we're all about helping it grow. So if you could go check that out as well, that's arena.social, and you can find us there, and it's just the Node channel, all one word. We have a bunch of different shows on our network. The Node is actually a network. So as you can see on our channel here, we got all of our shorts. You have the Node Monday through Friday, 9 a.m. to 11 a.m. Pacific Standard Time. Crypto and Chill, Tuesdays and Fridays, 5 p.m. to 6 p.m. Pacific Standard Time. The Blockchain Report with our boy Jeff. My name's Jeff. My name's Jeff. On Monday, Wednesday, and Thursday at 11:30 a.m. And then we got Sovereign Soil with myself and Drew over at Blockchain Basement, where we talk about emergency preparedness and homesteading. Sorry, I was getting some text from my mom. Got a little distracted for a minute. And the Blockchain Report is actually, he does a great job, has for years now, of finding early projects that have legs, good solid projects. And, they all don't pan out, but he's huge into farming, farming airdrops. And so if you're into farming airdrops, if you're always looking for that, that early gem before it takes off, sometimes even before there's a token generation event, that's a great show to catch. Again, myself and Drew, both, active homesteaders. I've been in emergency preparedness for decades now, homesteader for just over a decade, and was in the military for 22 years. So have a deep, deep background. And David has convinced me to start doing some coaching on it. So I'm building out a program for that. The market wrap up. David at 4 p.m. Eastern, 1 p.m. Pacific, does a daily market wrap up with deep analysis, with charts and just everything that he saw in the markets that day, both TradFi, DeFi, crypto. And starting tomorrow, going to be working with a member of our community, Ellie, who's in the chat. I got her headshots. I need to get your headshots so that I can put you both in the thumb. But he is going to be working with her and showing his coaching program live. So, basically pull back the curtain and show what he's done for 300 to 400 clients, so far, and how he's taken them from knowing, different, at different levels of, DeFi experience and investing experience, has customized a help me out here, customized program.
Yeah, so this is basically what we do. So when someone comes to me and they want to build a skill set in crypto and DeFi, I always start by asking just a couple of questions, like what do you know about wallets? What do you know about security hygiene? Do you know how to swap? Do you know how to bridge? Do you know how to use a perps dex? Do you know how to use a money market? Do you know how to use any of these different composable tools that we use every single day?
And you customize a program for them.
Exactly right. And it's all based on what their goals are. So if someone is just trying to build a skill set, okay, that's one thing. If someone is trying to learn how to trade something specific, that's a whole different thing. It really depends on what their goals are.
Absolutely. Absolutely. And what their risk tolerance is. There's so many factors, and in that one-on-one coaching, you get that nuanced, that bespoke experience.
That's really what it is.
Yeah. It's a very bespoke, and I'll be honest, that's not a word I use on a regular basis. I actually learned that word from my cousin, who has a high-end sailboat charter business down in Antigua, and he uses it all the time in his marketing. It's a very uppity word for
customized.
Yes. Bespoke experience.
I kind of like that though. It reminds me of those Bentleys, like bespoke Bentleys or something. Yeah. One-off, made just for you. Yeah.
Exactly. Jeff, who does the blockchain report, he is a DJ and has been for a while. So he's actually started doing on Saturday nights. We call it Saturday Night Fever. And he does DJ sets and has started doing interviews. And he has he's done one, and he has about 3 or 4 more lined up. I think he's doing one today, pre-record today with one of his buddies. And it's going to be in person. He's actually coming to his place and going to do it in person. And then the Red Pill. That's our unhinged Thursday night show that we started so that we can vent. Like I said, we're very based. And so we try not to get too based on our other shows, but that's our place where we get drunk and basically just talk about everything: religion, politics, aliens, psychedelic mushrooms, whatever. And we vent it all out.
We need that. We really need that. We need that, Mike. So let me ask you a question, man. There's some guys working outside on the street right now. They're like, I don't know, doing something. And there's one dude operating this piece of machinery. Can you guess how many dudes are just standing around watching him?
At least 4 or 5 government workers are leaning on a shovel watching one guy work.
There's one dude pretending to work, and there's literally 6 other guys just like standing around.
Yeah.
That's what's going on here, man.
That's government workers for you.
Mm-hmm.
Yep. Freak Atomic knows. All right. And last but not least, Wednesdays and Sunday evenings. We have something for you every day of the week. Monday, the weekdays and weekends. Jay and from our community, and Ellie, who is going to be working with David on Tuesdays and Thursdays on the show. They game. So right now they're on Arc Raiders. So if you want to join us for that, sometimes I jump in on there. Sometimes Jeff does. Just different members of the community. Nova. A couple others have jumped in before, but a lot of fun. If you just want to hang out, a lot of fun. So with that, if you want to follow us on X, we got at the Node channel, all one word, and the website that David's been working on. You can watch us live. You got the links over here for the news that we cover during the show. You got our at no charge. You can go through DeFi University. If you're not looking for that bespoke experience, that one-on-one customized experience, you can take yourself through. David built out a whole course from I know nothing about crypto to I'm doing looping strategies and I'm hedging. I'm hedging my investments and using the Greeks. Delta. Doing delta neutral strategies and all that sort of stuff. You can go through. It has quizzes at no cost to you. We love having stuff here that give you all value that doesn't cost anything. But if you want to take it to the next level, we have items like that. Again,
and Mike, all of that stuff in DeFi University, it's actually all of that educational content. It lives in the Node now. So it's up in the courses tab in the
It
node
lives in our ecosystem.
It lives in the node
It's
network.
going to grow and fester.
That's right.
All right. And then we got that private coaching, the bespoke private coaching that that we were just talking about. You can sign up for it here. David and I and Don built out the AI newsletter. It's a fully automated newsletter where you can put in the assets that you are interested in: crypto, TradFi, stocks, commodities. You get the S&P 500. You can put all of them in there, hit generate. It will give you trading ranges. It will give you the liquidity pool ranges, so lines of support and resistance, so that you can enter, concentrated liquidity pools. It gives you social media posts about your assets you're interested in, and it gives you news articles and links, hyperlinks to all of it, so that you can sit with your morning coffee or tea or your afternoon siesta or wherever you are in the world. You can generate that newsletter and you can get caught up on the assets you are interested in. Not the ones I pick, not the ones David picks, not the ones Jeff pick, but the ones you are interested in. So it's a fully customizable automated newsletter. Nothing like it out there that I've found. And you can, look at it on your screen, and you can have it delivered to your email. So and that is only $20 a month. I mean, that's less than $1 a day. It's like 75 cents a day to get a fully customized newsletter that's going to give you trading ranges, give you liquidity pool ranges, give you everything that you need to get started with your day.
And Mike, the way that I actually built out the back end of that newsletter when I merged it into my Google Cloud was to send out the newsletter twice a day. So it sends it out before the market opens at 9:30 a.m. Eastern. It sends it out at 8 in the morning Eastern. And it also sends it out after the market closes. So you get a market update before the open, and then you get a market wrap after the close. So I thought that was pretty cool.
No, that's very cool. And that will help out people if they're in different time zones around the globe and stuff like that too. Sure. Maybe we'll have to look at being able for them to be able to select like the times that they want and the time zone. That might be cool to add to it eventually.
That would be really cool, because let's say that there's somebody in in Europe, and they want to track, instead of tracking U.S. markets, maybe they want to track European bourses.
Exactly, or Asian markets, or whatever. Right. So that would be really, really cool, a feature to add. If you look at
it's already there. Yeah, so I just need to be able to put the in the front end the ability for users to change the time.
Like a drop down.
Yeah, exactly. Yeah,
perfect. No, see, look at that, man.
That's great, man.
We're improving things live.
I gotta take some notes here.
Right. All right. So and then we got our store. So we've been building out mugs and T-shirts, and let me click on it real quick. So we got David's books. So if you're one of those people who enjoy the feel of paper and books and stuff like that, and you like to read before you go to bed, whatnot, and you don't want to strain your eyes because the blue light. A lot of people don't like to look at screens for a certain period of time before they go to bed. If you want to read a paperback, then you can order those and you can read these. We also got mugs, we got hoodies, we got T-shirts, hats, beanies, you name it. If you want to support the channel, great way to support the channel. And the great thing about our store is you can pay with crypto. So you can connect your wallet, and you can, and it's safe. We're not scammy here.
Trust me, bro.
Trust me, bro. Yeah, trust me. But you can use USDC, Bitcoin, whatever. There's also, I think, have you added it yet? Where people, if they want, they can tip us, and they can basically donate to the channel to kind of help us grow. And
so not yet, but I'm going to. I'm definitely going to. So all I've built out so far is just like the basic functionality, making sure that everything works. So that's the courses, the coaching, the communities, the newsletter, the store, and that's all connected to Shopify. And so you can actually make crypto payments in USDC through Shopify. So that's the way that we accept crypto right now. But, I just need to be able to move into this new place. And so like over the weekend, Saturday, Sunday, when I move into this new spot, I should be able to get, I built out like a custom Zap button. So it's basically like just, it's a software product is what it is. I just need to install it on the node.pro. And then that way we'll be able to, if someone gets a lot of value from some of the courses, or maybe they really enjoy the live stream or whatever it is, they could zap some sats, Satoshi.
They want Jeff's feet pics. Whatever.
You never know, man. You never know. Hey,
yeah,
whatever floats your boat, dude. Like, if you want to send us some sats for Jeff's feet pics, dude, it's all good.
You know what? I'll hold it. I'll hold them to it too. I'll make sure that you get those feet pics.
Yeah, hold his feet to the fire.
That's right. I was going to say that, but I don't want to give anybody any ideas. So
I know, right?
All right. Well, let's jump into the news because I got a bunch of stuff and we got about an hour and 45 minutes to cover it. All right. So I'm not going to play this whole thing. It's 40 minutes long, but Mike Cagney is dismantling the 74 trillion DTCC monopoly. Why wait for incumbents to innovate when you can just build a better, cheaper, and more transparent financial stack for yourself? So let's play a little bit of this. I'm gonna just play like the first minute because let's see what we got here. Why hasn't been tokenized? Stocks on the blockchain will equity insurance. Let's see. How Figure disrupted the HELOC market.
Yeah, so it looks like, what's that guy's name again? He's the BlackRock dude.
Is it Jamie Dimon?
Fink.
Larry Fink.
Yeah, his name's Fink.
Larry
so this
Fink.
guy, dude, like, people have a short memory, I think, because he was pushing that toxic DEI, ESG stuff on corporations for a long, long time. And then he comes out and realizes, we can make some money with these crypto products. And so now he's all gung-ho into Bitcoin.
Well, wasn't he the pet rock guy? He was like, Bitcoin's a pet rock, or was that Jamie? I think that was Jamie.
So both of those guys, they were saying that, while with the other hand, they were actually buying.
Well, I know he was saying that if anybody, that was Jamie Dimon too. If anybody in his organization bought JP Morgan Chase bought Bitcoin, that he'd fire him. Right.
And then literally the next day, his firm is buying tens of millions of dollars of Bitcoin.
Exactly. So no, but you know what? I'm just going to post the link to this. I'm not able to log in. I wasn't able to post the links for the news today. I wasn't able to log in. So if you could, let's hit that later today. But I'll drop this link on the node.pro, and then you can go and you can listen to this because this is just too much I don't want to burn too much time on this. But basically, the gist of this is they're saying why wait for lawmakers? Why wait for incumbents to innovate? Politicians and just all these people that are holding up this innovation when this is software. This is you can tokenize, you can do DeFi, you can do all this stuff, and just move forward. Without don't let them slow innovation down. So next up, I was really happy to see this because I still have all my Plume. It has taken, in full transparency, me and David have reported on this. There was a massive liquidity, drop in Plume Network, months and months ago. But innovation is still going. They're still building. They're still in Washington, D.C. They're educating lawmakers. They're very active. So I've stayed invested because, the liquidity getting sucked out was concerning. But fundamentally, other than that, nothing has changed. And I understood it was a long shot. So this is something I was glad to see this morning. The floodgates for institutional lending liquidity are officially wide open. Plume Network just completely transformed their real-world asset vaults by violently integrating Nest Credit, which is built on Plume Mainnet, directly with Morpho. This is an evolution. So we saw.
So Mike, they said by violently integrating. What exactly? Like, what type of violence?
It's a buzzword. Let's not get sidelined with buzzwords.
Like what?
So Morpho, for a while, I've reported on this months ago. Morpho, for with a couple of assets, was connected to Nest, Nest protocol. It's a DEX or a protocol on Plume mainnet. But that it was just for a few select assets. So what this is saying is that Morpho is fully integrated with Plume Network. So this exact structural deployment creates absolute composability, allowing massive capital to fluidly move between traditional assets and on-chain lending. The entire tokenization sector mathematically requires this exact level of frictionless cross-protocol liquidity to scale into the trillions. Aggressively position your portfolio right exactly where heavy institutional lending meets real-world asset verification. As always, not saying ape into Plume or anything like that. This is just, for me, a long shot. As I see what they're building, they are a layer one that is laser focused on RWAs and tokenization and building out a full ecosystem of multiple protocols. The liquidity is very thin across those protocols except for Nest. So do your own research, invest accordingly.
So Mike, yeah, when I'm taking a look here at Plume, right? So Plume is, an example of what I think is a really interesting project, and building something that definitely is going to gain some traction and adoption. So Plume is basically like a specialized layer one blockchain. It's designed specifically for RWA-Fi. So
Yes.
that's real world asset finance, right? Most blockchains like Ethereum or Solana, they're general purpose chains, I guess you could say.
They cast a wider net.
Yeah. Right. Yeah. So Plume is unique a little bit in that, they built it from the ground up to integrate legal compliance and technical requirements that you need if you're an institution to be able to bring stuff like real estate or private credit or treasuries directly on chain. So that's what makes Plume unique. Unfortunately, it looks like a shitter, man.
No. Price wise and liquidity wise, like I said, that's why I keep emphasizing that. You do your own research. Assess what your risk profile is. For me, it's a long shot. I've been building. I built a bag of it. I'm probably not going to invest anymore because I have a decent sized bag, but it has potential. I mean,
it does. It definitely does. No, I agree with you 100% that it's got some potential because, Mike, I can't tell you how many projects I've seen launch and then be down 95, 97% only in the next bull. All of a sudden, there's a spark around what they're doing. There's a lot of interest that resurges. And then, that 1 cent token goes to $1, over the course of a week. I've seen that so many times in crypto. And Plume is an example. As long as they can survive, as long as they can survive until the next bull, they could do really, really well. So,
emphasis on could. Emphasis on could.
It could.
Like I said, we're critical of our own bags. I'm going to point out the good and the bad on everything. That's just how we operate here. It's no project is immune to our critiques.
That's right.
All right. So next up. This one I thought was really interesting. Bankless IPOs equity shares on Canton Network. I'm very bullish on Canton. Very little that I can find that I am not bullish on. But other than a lot of people would say it goes against the cyberpunk, ethos and what blockchain was made for. But Bankless founders Ryan Seen Adams and David Hoffman announced Wednesday that it will be taking community ownership of the company to the next level via an on-chain IPO, initial public offering, stock. The crypto media company will be issuing equity shares exclusively on the Canton network, leveraging Canton's recently announced initial permissioned offering framework. Bankless is seeking to sell 230,000 tokenized equity shares at $300 each, pending final regulatory approval. With Canton Network's unique architecture, crypto community members will be able to purchase real on-chain BNKL, will be the ticker, shares in Bankless's private subnet after completing short onboarding materials and signing onto the network's Canton Foundation mandate. The Canton Foundation mandate ensures that each and every one of Canton's users deriving value on the network also pledges to share the moral fiber of its early partners, which includes HSBC, JP Morgan, and Goldman Sachs. Bankless is not the first media company to go public, but it is the first to do so, leveraging the new digital security carve-outs pioneered under the latest administration. In strict compliance with the SEC's latest rules, Bankless will be appointing the president's granddaughter, Kai Trump, as the company's new chairperson. Okay.
I mean, hey, that's a great idea, dude. Like, if you want to get something done,
yeah,
it's brilliant, man. And I think that this is something that I would be very interested in doing for the Node network at some point in the future, Mike.
Yeah,
because I'm taking a look at this, and man, this looks great. So the whole idea of origination on chain, an IPO on chain, and tokens as equity, I love that. And I love doing it on Canton network too, because, Canton is a privacy preserving layer 1. So it's designed for this type of compliant institutional finance. Now, Plume, which we discussed earlier, it's great for retail, RWA-Fi. But Canton is like the dark pool of institutional tokenization. So that, preserves privacy. And it's really good for institutional heavyweights and super validators like Visa and Goldman Sachs and BNP Paribas, right? And they do a really, really good job of maintaining regulatory compliance using their DAML smart contract language on Canton. Yeah. So, dude, the whole idea of a bankless, IPO on Canton, love it. This is great. I would love to see more of it.
Yeah, no, and I a lot of the projects that a lot of my biggest holdings in my portfolio are projects that are laser focused and purpose built for, to address very specific pain points in upgrading the traditional markets. So DeFi, you got Canton Network, you got Aerodrome we'll be talking about here in a bit. I talked about it a lot yesterday. Being a liquidity hub, that people can build, with the new platform that's coming out, developers will be able to build and access that liquidity. So, I mean, not to say that I want to, but, an example is we could build, the node at DApp to where people could, borrow and lend and stuff like that and use the liquidity off of Aerodrome.
So just need liquidity.
Well, that's the thing.
Yeah, that's basically it.
That's the key, is being able to access liquidity. And that's what blockchain technology is doing, is it's making illiquid assets, through RWAs and tokenization, illiquid assets and in traditional finance, that liquidity that gets bogged down in the system because of all the friction, the manual processes and the wire transfers and those things that take, hours, days, weeks to, to process because of the manual processes and, compliance, like, KYC and things like that. All of that is automated with this. So it just allows liquidity to flow. And that's why it's so important to pay attention to these projects that are automating the processes like bridging and swapping, and that are, becoming interoperable with each other. And which projects, which specific tokens and projects are part of the rails and providing those bespoke experiences for their clientele. See how I worked that in there?
Wow.
See how I worked that in there?
Fancy,
like
man.
I'm making it part of my repertoire.
Your repertoire. Damn, you got a bespoke repertoire now?
Right. All right. So part of that centrifuge, it looks like on Aerodrome, is they tokenized exposure to the S&P 500, now accessible through a DEX. No minimum, no wait list, freely transferable on base. So on Aerodrome now, you have the tokenized S&P 500. I see David's ears perking up.
I do. I am. Tokenized S&P 500, man. I mean, and you said on Aerodrome?
Mm-hmm.
Okay, so I've definitely got to take a look at this.
All right.
Now, there are, and it looks like it's by centrifuge, right?
Yep.
Okay, got it.
It's DESPXA.
DEXPA. Yeah,
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 like that.
something like that. But it looks like you can actually provide liquidity
Yep.
in DESPXA paired with USDC and earn arrow emissions. Now, there are a lot of risk factors that you have to be aware of before you even think about doing something like that. So, providing liquidity with a stable coin is referred to as an impermanent loss factory for a reason. Impermanent loss is real and it occurs to the upside or the downside. Direction doesn't matter. All that matters is the magnitude of the move. And so when you provide liquidity, you really need that market to be moving sideways, or you need the assets in the pool to be extremely tightly positively correlated. Otherwise, I think it's unlikely over a long enough period of time that you'll actually be profitable if you're paired with a stable, because your gamma, that's your impermanent loss, your gamma is likely going to be bigger than the fees that you earn. And that means net, you would have done better by just holding.
Well,
so a lot of risks.
And correct me if I'm wrong, because I want to stress this. Impermanent loss is it's definitely something to take into consideration, of course. But really all it is the difference between what you earn and what you could have earned by simply holding the assets, correct?
So impermanent loss is the cost of volatility. That's what it is. And so when an asset moves up or down and your fees are not greater than that move, then you would have just done better if you had held the underlying assets and not been in the liquidity pool.
But you can still profit with impermanent loss, just not as much.
Yeah, you can. So here's the thing, like if you provide liquidity in this SPX token paired with a stable coin, and the S&P rips, right? It rallies through your range. Okay, great. You made money in US dollar terms. You absolutely did. But take a step back.
If you just would have held the assets, you would have made money.
If you would have just done nothing, then you would have made more.
Well, I want to point that out because a lot of people don't point out that nuanced fact, and it's not guaranteed, but just a lot of people hear impermanent loss and they just hear that loss and they're just like, oh, that means I lost money. It doesn't mean that you potentially lost money because you would have made more just by holding the assets, but you can still profit. It's just not going to be as profitable.
Right. And so, but here's the thing. If you have to take all of this smart contract risk, and you have to take platform risk, and you have to take counterparty risk,
yes,
in order to provide liquidity in the first place,
yes,
and then you underperform doing nothing, well, then that's not good, right?
Well, no, absolutely. I want people to fully understand impermanent loss, though. So you can have impermanent loss and still make money. And then on some assets, you can be in some liquidity pools, like on Nest. That's why I'm so bullish on Plume and Nest. Is I actually have some detailed that I wouldn't mind having you look at, some detailed before that liquidity got sucked out of how I was planning on looping. So basically, taking out or providing liquidity to certain tokenized like in alpha is one of the funds that's on Nest, and it had a decent amount that you could earn, but then like you could borrow against it, so you could earn that yield and then borrow against it, and there was a bunch of different things you could do. And then now with that kind of liquidity bridge to Morpho, but then you could, and that was actually where I was going to go, is you could actually take out a loan on that in alpha on Morpho, and then now you're on the base network. And with Aerodrome and with it going multi-chain with Ethereum and all in the Arc and all of that, it gives you access to other vehicles that you could use to invest what you borrowed, and so it opens up this whole ecosystem that you can do some of these strategies with. So I wouldn't mind sitting down with you and taking a look at some of that.
Oh, dude, I'm more than happy to do that. In fact, we could do that live if you want to.
Absolutely.
But, you know, the thing for me when I think about liquidity provision is that there is definitely a place for liquidity provision. Oh, okay, absolutely there is. But I think most liquidity pools are kind of like selling crappy short puts. Like that's kind of the way that I view them. And so all that means is, you know, if I'm looking to sell volatility, right? If I'm trading options and I want to be a premium seller, then what I absolutely need more than anything else is I need volatility in the pool to be much higher than the volatility for those same assets in the pool, but external to the pool. If that is not the case, then I'm selling cheap vol. I'm selling cheap volatility. And you don't want to do that because that means that you've got what's referred to as a negative variance risk premium. And so all that means is given a long enough period of time, you are structurally unlikely to be profitable. Now, instantaneously or over a relatively short period of time, maybe a week or two, something like that. If there's a lot of volume in that pool, then your fees, especially if the underlying asset moves sideways, then your fees can be much greater than your gamma. That's your impermanent loss. If that's the case, then you made money compared to holding. Great. Awesome.
Well, that's why the bear market is so powerful. You know, when volume is down and interest is down and all these assets are trending sideways, there's a lot of money to be made in the bear market.
There really is. You just got to know what a good opportunity looks like. That's all.
Yeah. And that's where DeFi University and David's private coaching comes in.
Yeah, something like that. Something like that. I mean, look, if you want to build this skill set, I can absolutely help you to do that. What I've seen is that it takes around, starting from zero, takes about 8 to 12 weeks. Just depends on how dedicated you are and how quickly you want to move.
No, absolutely.
You know, yeah. So what else we got going on here, Mike?
It looks like S&P on the Canton Network, S&P Dow Jones Indices partners with Tyco, tokenized the iBox U.S. Treasuries Index on the Canton Network.
Awesome.
And then the last one before we get into the RWA specific stuff, it says this is absolutely massive. Manipulation in crypto. I'm not going to say finally ending. I'm going to say manipulation in crypto. They found some more manipulation in crypto and are addressing it. 10 foreign nationals have been charged by the U.S. Justice Department for manipulating the crypto market. These 10 executives and employees are from 4 different crypto market makers: Gotbit, Vortex, Antier, and Contrarian. The indictments allege these people conspired to inflate the trading volume and price of tokens and profited through the sale of cryptocurrencies at inflated prices to unwitting investors. These so-called pump and dump schemes caused losses to investors in the United States and elsewhere. 3 of the accused, including 2 CEOs, were recently arrested and extradited from Singapore to the United States. To make it simple, these guys pump the price with fake volume, then trap retail investors at higher prices, then dump on them, rinse and repeat. These market makers are the reason why crypto has been dumping nonstop for months. I don't know if there's any data.
I don't agree with that statement. But I thought for a second, Mike, you were going to say that they were arresting people at Binance. Like they're the kings of this type of pump and dump.
I think there's a lot of data that supports that. Especially very. And not to say that they were necessarily behind it, but there was there was a couple of very specific events that took place only on Binance during October 10th. I'll put it that way.
Yeah, Binance was the reason for October 10th, unfortunately.
And there's again, a lot of the stuff that happened only happened on Binance that caused, stable coin DPEG, USDE, and, there's a lot of stuff that only happened on Binance. What was it? Cosmos Atom went to like 1 cent or something like that. and nowhere else.
Yeah, but I think that really tells you how thin the liquidity is or was, probably continues to be for most altcoins.
Yeah.
You take a look at Cosmos, you take a look at EtherFi, you take a look at, there were a lot of them that damn near went to zero on October 10th. And the thing that happened on the 10th was there was basically, it was a Trump tweet, right? Didn't Trump tweet something, and there was like a really big trader that came in. It was right after the close, like on a Friday, wasn't
That's
it?
happened multiple times.
Yeah.
Like right before big announcents, like people have been making, somebody, anonymous person has been making like billions and billions of dollars, basically in ahead. They're making key moves and very large key moves before like Iran, it was announced, before they started doing all those military actions in Iran. There's just a lot of really sketchy stuff going on.
Yeah, what happened on the 10th, and this is just my understanding after reading through some of the scanner logs, was that number one, just a couple of minutes, I think it could have even been measured in seconds, before Trump tweeted about, I think it was something about Chinese tariffs that he tweeted. A couple of seconds or maybe a minute or two before he tweeted that out, a really large trader came in with, I think it was $1 billion or maybe $1.5 billion on Binance and on Hyperliquid, and got short with leverage. Okay, like just seconds or maybe a minute or two before that tweet. The tweet comes out, it dumps markets. But what that trader did that was so interesting was somehow they were able to manipulate a couple of different pieces of collateral on Binance. So there was like this like wrapped ETH collateral that ended up depegging. And there was actually on Binance, there was an improvement proposal for these specific types of collateral that experienced depeg events on the 10th. And it was like within days, I think it was 8 days away from being implemented. And so whether that was luck or whether it was the trader knew something specific about the architecture of Binance's margining system, regardless, it resulted in those pieces of collateral depegging significantly on Binance and not on other exchanges.
Yeah.
And so I think it was like a wrapped BNB piece of collateral, like a wrapped ETH piece of collateral. And then, of course, the famous one was the USDE stablecoin, which went to 65 cents on the dollar on Binance and not on other exchanges.
Yeah.
And so that triggered this cascade of liquidations on Binance, which then filtered through into Hyperliquid too.
And from what I was reading at the time is a lot of people had stop losses in place that didn't trigger.
Yes. Yeah. And that I've seen that happen a lot, not just on Binance or Hyperliquid. I've seen it happen on, that happened to me actually on October 10th on GMX. I was very, very lucky that I didn't get stopped out because, the move was so fast. It took place over the course of just a couple of hours that, by the time the volatility settled down, I was no longer in like liquidation territory. Like it was crazy, man.
So it actually worked in your favor.
It did. It did work in my favor. I ended up, that day was not a good day for me, but I survived. And, I'm just looking back on it, man. Like when I see indictments for and extraditions, for like, what was it, 10 guys in Singapore?
Yeah.
It's like, dude, there's so much more work that needs to be done on that front. It's not like 10 dudes in Singapore. Give me a break. When are they going to go in and actually go after Binance? Like seriously, Binance is, I think, a bad actor in the space. And, when I see CZ getting pardoned, it's like, all right, man, looks like we're never going to get like, truly regulated decentralized finance and crypto markets. These pump and dump schemes are going to continue, unfortunately. So I'd like to see more enforcement actions.
Absolutely. All right, well, let's jump into some get my meow off my lap. Let's get into some RWA specific stuff. So ECB finalizes a payment strategy. The European Central Bank has released a landmark payments policy document outlining the integration of private tokenized assets with central bank money.
Wow.
You seen anything?
That is, yeah, that is pretty interesting. You know, the European Central Bank today, they call it the Eurosystem's Comprehensive Payments Strategy. Now, I am suspicious by default of anything coming out of Europe, especially their institutions.
Yeah.
So it's they're calling it the anchor and complement model. So here's the core philosophy of this new central bank money. Okay, this is the new policy is that central bank money, they call it CEBM, must remain the anchor of the financial system to ensure stability, of course, don't you know, Mike? Because if the people were to have freedom money, oh, that would mean instability. Can't have that.
Oh yeah.
Yeah, of course. But let's just import the third world. We can have that type of instability. And so now they say it's going to officially coexist with these private tokenized instruments. So you've got this public anchor. The ECB is going to provide tokenized central bank money. So, dude, they're going to do this on Ripple, aren't they? They've got to. I bet you they're going to use XRP and Ripple for this type of, a central bank digital currency. So,
I mean, that it seems like that Ripple's making all the moves to become a global bank. They bought one in Australia that already had a lot of the licenses in place and things like that, and that's what they've been doing. Ever since they shifted from that narrative of doing cross-border payments and cross-border remittances, and they started RLUSD and their stable coin, and it seems like they've kind of shifted from that narrative because all of the XRP that they sell, when they in the monthly unlock of the escrow, 1 billion tokens, whenever they do sell, because sometimes they relock it, but whenever they do sell it, it seems like it's always for an acquisition. It's to buy another one of these banks or something, because it's easier to buy a bank that already has the licenses in place and the permits and all that stuff and all the regulation and all the regulatory stuff is already in line than it is to build it from scratch.
True. But what's so funny is I view Ripple as allegedly a complete fraud. And XRP Ledger also, nothing going on there except scams. But it's interesting to me that I see, this European Central Bank launching central bank money and not using any of, Ripple's technology at all. So I think that Ripple just fades away and ends up dying over time. But, this is yeah, potentially, so what the ECB is doing, they call it, they're launching this flagship architecture. Okay, so this is the architecture that they're using. They call it Pontes and Appia. Okay, so these are the names of the frameworks, the two major technical frameworks that are going to make the tokenized payments a reality. So they don't have to do any of this. Like, the technology already exists, the public ledgers already exist, but they want to make it super compliant. So probably so that they can just, like, when they need to tax their citizenry, they can just steal it directly from them. So they're calling it Project Pontes. It's scheduled for full activation in Q3 of 2026. That's this year, man. Wow. And so this acts as a bridge that's going to allow these, DLT platforms, these are digital rails, like these private blockchains used by banks, to settle transactions instantly using central bank money. So basically all they're doing here is moving from ancient, slow, antiquated financial rails to digital rails. That's what they're doing here. So that's Project Pontes. Now, Project Appia, this is focused on the programmability of payments. So it's going to set the technical standards for how smart contracts can trigger automated payments in euros, ensuring the different bank systems can actually talk to each other. So all they're doing is upgrading their systems. And, it's probably about time. So let's see here. It looks like there might be some impact on non-EU stablecoins. It says that the document is very clear on strategic autonomy. So it specifies that for like core wholesale settlement of transactions, non-EU governed stablecoins like US dollar denominated USDT or USDC are not permitted. They're so stupid, dude. These Europeans at that central bank are dumb as fuck because, like, dude, the US Treasury system is what runs the world. And so if they're not going to allow US dollar denominated stablecoins into their Euro first architecture, then who's going to use their architecture, man?
Well, I mean, wouldn't it be kind of bullish for liquidity pools that are swapping like USDC for, like European stable coins, because you would have to, basically swap, to be able to move liquidity between the two.
I mean, potentially, if there's a lot of volume, sure. But it really depends on what the fee tiers are. You get really, really narrow fee tiers, then you need exponentially more volume for your fees to really be worthwhile.
Gotcha.
But they're talking.
Well, let's move on because I got a bunch of stuff to go through. So Big Lou in the chat did bring up, did Hype do something with XRP today? And I did drop something in our newsletter about this, but this is basically what happened. So Hyperliquid and Ripple, and again, I know that I talk a lot of FUD, some people would call it. I call it facts about XRP, but I'm going to point out the positive too. So Hyperliquid and Ripple are making waves due to a strategic integration aimed at bridging decentralized finance with traditional institutional markets. Ripple Prime and Hyperliquid integration. On-chain perpetuals. Ripple's institutional arm, Ripple Prime, has expanded its integration with the Hyperliquid exchange. This allows institutional users to trade on-chain perpetual contracts for traditional commodities directly through the Hyperliquid infrastructure. Institutional hedging. The move is designed to let institutions offset their decentralized derivatives exposure against positions in traditional markets, supported by Ripple's liquidity and regulatory framework. Market impact. Following the news, Hyperliquid's native token saw an 11% price jump, and open interest for Hype futures surged over 1.56 billion as of this morning. Wider Ripple news. In addition to the Hype integration, Ripple has been active with two other major announcements today. The federal banking charter. This is what I've been talking about. Ripple president Monica Long confirmed that following the passage of the Genius Act, the company is officially seeking a federal banking charter through the OCC. Like I said, they're trying to become a bank. This would transition Ripple from a state regulated entity in New York to a federally supervised one to support its RLUSD stablecoin. Now, keep in mind, a lot of this is very bullish, but not necessarily for XRP. You need to understand XRP's role on the XRP ledger. And with RLUSD, the stablecoin, taking over quite a bit, not all, but quite a bit of the use case of XRP other than for gas. And the big, the big selling point for, using the XRPL has always been it's fast and cheap. So it takes 0.00001 XRP per transaction. It's not enough to send XRP to the moon. And it's not going to, it's not going to send it to $100, $1,000, $10,000, $1 million. If Ripple was going to be, or anybody was going to be buying back XRP, they would be doing it now. They would have already done it. They are not going to, there's not going to be an XRP buyback. You don't need to, you should always keep your crypto on cold storage if you're not actively using it in DeFi or something. But, I've heard people talk about
check
exchanges because they're gonna seize it, and all that kind of stuff.
Mike, this is so interesting, man. So as you were speaking, I was going through and reading about the partnership between Ripple Prime and Hyperliquid.
Okay.
And now bear in mind, this is what I'm going to read to you. This is from Google. Okay, so this is Google Gemini. Gemini is saying this.
Got
so it says, here's the XRP. This is exactly what you were just saying. The XRP disconnect. So it's worth, this is directly from Google Gemini. It says, it's worth noting that while this is a Ripple company product, these trades do not settle on the XRP ledger. They happen on the hyperliquid layer 1, meaning the benefit to the XRP token itself is mostly indirect rather than a direct utility play. That's exactly what you just said. You know, there's no value accrual to that XRP token. That XRP token is a scam, and that's all it will ever be. So whenever you see a partnership between Ripple, the company, and
very bullish
anything else,
very bullish for Ripple.
Great for Ripple, the company, but what does that mean for the XRP token? Nothing. It means nothing. So,
well, it means hype. You know, I mean, it's something. I'm sure it's all over social media right now. I haven't looked, but I'm sure it's all over social media, and all the usual suspects that, you know, constantly, endlessly talk about XRP are going to hype it and say that this is bullish for XRP. And most people don't understand the difference between these tokens, the relationship of the token to the projects or to the company. And I'm going to say it again. There is and especially for Ripple and XRP, look it up. There is a court case, Ripple versus the SEC. Judge Torres was the judge that presided over it.
Right. Yeah.
She ruled that XRP is not a security, and it was celebrated, myself included, at the time. That it was supposed to send XRP to the moon. It didn't move it hardly at all. Like I think it got like a 10% jump, and it retraced, if memory serves. And the reason is because that's not bullish. If XRP was a security, then Ripple would have had a legal obligation to ensure to do everything legally possible to make sure that we profited. Now they're free and clear to sell as much XRP as they need to build their bank, and they have
that's what they've done.
Yeah, and they have no legal obligation to ensure that you profit. So you're basically buying hype so that they can sell and build their company, and there's no guarantee that once the hype wears off, once people realize that there is no correlation or relationship between the price of XRP and Ripple's success, and people start dumping, you're going to be exit liquidity, in my opinion.
Oh, I agree 100%. I think that anyone who buys XRP is already just providing exit liquidity to Ripple, the company. It's illegal. Judge Torres made it illegal for Ripple to sell XRP tokens to institutions. So
yeah, because it wasn't a security for retail, but it was for institutions.
Right. So it's illegal to sell XRP to institutions because Ripple has no obligation to make sure that you make money buying XRP. It's basically the shittiest of the shitter. Like that's
Dude,
what it is.
If Ripple actually IPOs, I'll be very interested to see what happens to the XRP token.
I think XRP doesn't have any use case or utility at all.
Other than gas.
But it doesn't, like no one uses it for anything, and probably never will. It's just amazing that, Ripple's been able to survive this long by dumping on retail. And Judge Torres made it illegal for Ripple to sell XRP to institutions, but legal for Ripple to dump XRP on retail. Yeah. So it's just like, man, and what they're doing with the money is just, building a bank by buying different, prime brokerage houses and, whatever else. But what products have they actually shipped so far? A stable coin that I don't know if they're going to be able to compete with the likes of Circle and Tether.
Yeah. And that's what it really comes down to. Cross-border payments, cross-border remittances, stable coins, they solve all that. Right. And there really is no need to use the XRP.
Right. But that's also, Mike, why it's so stupid for the Europeans to exclude US dollar denominated stable coins from their.
They'll fix that.
No, they won't.
They have to.
No, they won't, dude. I think that they are like, look, they're restricting the military, the US military, from using their airspace or bases. It's like, okay, so you guys, you don't want the US Treasury system. You don't want us to use your bases. You don't want to reopen the Strait of Hormuz. It just doesn't really seem to make sense to me. I don't think that I don't think that the European banks are going to allow those US dollar denominated stablecoins. I think that they're going to stick to their guns and try to make it like a closed system, which isn't going to work. It's not going to work. So they'll be able to upgrade their rails, but it's just not, it's not a good idea, man. I just don't think that that's a good idea. But, taking it.
Real quick, I don't want to get bogged down on this too much, but I do want to address, valid questions. And this is a good one. But I do want to move on because we have a ton to go over and we only have an hour left. What I don't understand is, why Vivo Power, never heard of them, but I do know this aspect, buys so much XRP like treasury. So I know that Ripple was selling, at one point was talking about, I don't know if they got around to doing it, but they were going to sell off, not ownership, but basically their interest in the escrow account, the escrowed XRP. Do they now know more about the future use about it, or would they go broke doing this? So these companies that are buying up XRP, I mean, like, what do you think that their thought process is? Because they're supposed to be the smart money. Why would they be buying up XRP?
Obviously, they're not the smart money. That's pretty clear.
That's what I'm getting at. Is, I mean, like, why would these institutions, if there are any, are any of them buying up, this escrowed XRP, or are any of them buying in any sizable amount XRP?
Well, I mean, I'm just reading about Vivo Power International PLC. So this makes zero sense. They call themselves the world's first XRP-focused digital asset enterprise. And if you take a look at the stock, Vivo, like, this thing has gone from several $100, like at its peak, up above $200, now $2. And
Okay.
there's no reason to think that this is ever going to recover, because just read about it. It holds XRP. Like, this thing's going to zero. That company's going to go bankrupt. So Vivo Power, starting in the middle of last year in 2025, it made this, what I think is a radical decision, to adopt XRP as its primary reserve asset.
Oh, shit.
So, like, dude, like, they would have done better adopting Fartcoin as their reserve asset. So
okay, well, that let's move on, because that explains a lot. I mean, it's in its death throes. They're panicking. They're trying to find some way to not go bankrupt. Obviously,
it just,
and if they
I
have a
don't get
bunch
it.
of XRP and they do go bankrupt, that's an asset that potentially is going to be dumped on the market to make their creditors whole and stuff like that. So that's not bullish at all. All right.
Nope.
Moving right along. Wholesale CBDC deadlines. So it looks like the European wholesale CBDC infrastructure is advancing rapidly with Project Pontus. You already talked about this. Let's move
a little bit.
SEC and CFTC harmonization. In a major shift for governance tokens, the SEC and CFTC signed a memorandum of understanding, or an MOU, to coordinate oversight, providing the first clear token taxonomy for institutional grade digital securities. What are your thoughts on that?
Well, so here's the thing. The last bit of that sentence, institutional grade digital securities, right? So what does that mean for something that isn't categorized as institutional grade? Does that mean that it is made illegal? Or does it just, end up in that attach, detach framework that the SEC and CFTC have been talking about recently? I don't know, but there are a lot of governance tokens out there, and they could, I don't know what's going to happen, but they could suddenly be made, not legal products for Americans. So imagine if, you're an American and in your Coinbase account, or in, your decentralized self-custody wallet, you hold some of these governance tokens, and suddenly overnight, by fiat from the SEC and CFTC, those tokens are made, non-compliant. What does that mean? What does that mean for you as an American citizen? I don't know, but it seems as though these two agencies are dividing duties based on this new taxonomy. So the CFTC is going to have primary oversight over tokens classified as digital commodities. Like, and this is hilarious. So remember, they came out with the Sweet 16, right? So these are, according to the CFTC, digital commodities now. Bitcoin, of course, the only digital commodity. Ethereum, Solana, and XRP. XRP is somehow a digital commodity. And then they call them digital tools, okay? Like governance tokens. I guess a governance token is a digital tool. I mean, kind of, sort of. So that's the CFTC. Now the SEC, they're retaining control over digital securities. So like digital stocks, digital bonds, and any token, even a governance token that is sold as an investment contract, i.e., if the team promises number go up based on their managerial efforts. That's not good, man. What does that mean for Athena? What does that mean for all of these digital asset products on Pendle, which are essentially like wrapped tokens pegged to one that represent some proprietary strategy. So like Athena, they run a basis trade. They've got USDE, the algorithmic stable, and SUSDE, a yield-bearing rebasing token. So I'm unclear as to whether the SEC would categorize SUSDE as a number go up based on managerial efforts token and therefore some type of an investment contract. That would make it a digital security regulated by the Securities and Exchange Commission. So what does that mean for us as America? Yeah, what does that mean? Yeah,
I gotta give a shout out to the arena. We got like freaking 70 people watching on the arena.
Hell yeah, man. Hell yeah. Let's talk some more shit. But, I mean, here's the thing, dude. Like this regulation by fiat from these agencies is just, I think, complete nonsense. Like, number one, in crypto and DeFi, code is law. Okay. And so what someone says from some ivory tower on high in Washington, really, you guys, it doesn't matter what they say. It really doesn't matter. And if they want to, criminalize or over-regulate these burgeoning industries, these crypto and DeFi industries, then what's going to happen to all the innovators? They're going to leave the United States and not look back, man. And so it's really a shame that it's a shame that they're starting to regulate this stuff at all. I mean, look, some regulation is good, I think, because you don't want people just going out into crypto and getting scammed. That's horrible. Yeah. But at the same time, like
we're adults. We can decide what we want to invest in and what we don't want to invest in. We don't need big daddy government to tell us that we're not an accredited investor. We don't have enough net worth, so we're too stupid to invest in certain vehicles.
Exactly right. And I think it remains to be seen exactly how the SEC and CFTC are going to treat some of these digital asset products like SUSDE, a number go up product, based on the managerial efforts of the team. If that turns into an investment contract and a digital security, and then all of a sudden in the United States, you're legally not allowed to hold it. Like, dude, that doesn't make any sense to me. Now, they did carve out some key protections for DAOs. So, the essential managerial efforts part of this Howey test, which has haunted these decentralized autonomous organizations or DAOs for years, there's now this decentralization milestone where a token can graduate from being a security to becoming a digital tool. But remember, this is all just, a regulation by fiat. It's just some guy, at the SEC and CFTC made this stuff up and said, these are the rules that you have to follow. Well, fuck you. Like, no, like code is law in this space, man. And so here's another thing. They're saying that there's no embodied security. The SEC has finally conceded that a token does not embody a security. So a token can be sold in a securities transaction, like in a venture capital round, but then it can trade as a non-security commodity or tool later on. So again, this is just like, regulation by fiat, man. Just like they're just saying, hey, this is what you can do, this is what you can't do. And, it's such a shame. It's such a shame, because they're going to end up regulating out all of the people who are really serious builders. Like that's what's going to happen with this. And you're going to see, cities in South America and cities in Southeast Asia
are going to blow up because
are going to boom.
Well, it's going to be the same thing in the U.S., where you see Florida and Texas and places like that, booming because they're, leaving places like New York and California that are taxing the shit out of people, and they have massive regulations, and they have environments that are hostile to business owners and people running businesses. People, business owners, they're smart. If they want to compete, they have to go where the environment is the most fertile, for them to build and grow and innovate and things like that. And if that's not in the U.S. and Europe, it's going to go to these, second and third world countries.
It's definitely not in Europe. Like, there's no doubt about that.
Yeah. I'm just saying.
You can't innovate in Europe, but if here in the United States, if it is, if the SEC and the CFTC are regulating these products moving forward, that's like a federal jurisdiction. Doesn't matter what the states say.
So, well, no. I'm using I'm using like a micro environment to just to show that this can happen globally. What's happening in the U.S. can happen globally. If people are willing to leave California and New York because for greener grass, they'll do that globally. They'll go to Colombia, or maybe they'll go to some place in Asia, or that's more friendly. Saudi Arabia, the Middle East, they're very
Saudi Arabia. No way.
They're very crypto friendly in the Middle East. In a lot of those.
Yeah, but not friendly in many other ways, I would say.
But if you're a business owner, and I mean, low or no taxes, and their regulation is very minimal on crypto. If you're a business owner and you're wanting to innovate in the crypto industry, you do what's best for your business. You put aside your personal feelings and biases, and you go where you're going to be the most profitable.
I mean, that's definitely true. But at the same time, Mike, one thing for me is crypto and DeFi have democratized the ability for a developer to create, basically any type of financial product they can dream of. But if these regulatory bodies are going to say, hey, you know what, the barrier to entry for you to bring a new product to market is actually much, much higher.
Yeah.
Well, then, there's a lot of smart people who are going to leave these overregulated jurisdictions.
Oh, absolutely.
And they're going to leave, and they're going to go to places where all you need is a laptop and a dream and a skill set, and you can build some amazing financial products.
That's what made the U.S. what it was. Back in the day, and that's why people came. The smartest and brightest came from around the world as the American dream. It was the opportunity, not the guarantee, but the opportunity that if you had a great idea and the motivation, that you potentially could be, do very well for yourself, where those opportunities weren't available in a lot of other countries. So it's, that's just the way it works. So let's go ahead and move on. Institutional RWAs, the rise of on-chain debt. Tokenized treasury milestone. The market for tokenized U.S. treasuries has surged past 10 billion, recently hitting 12 billion or more, driven by massive success of BlackRock's BUIDL and Ondo's USDY. What do you see on this, David?
Yeah, so the thing for me with these on-chain treasury products is I would love to be able to trade them, but many of them are, I guess gated is not the right word. They're gated in the sense of like, you need a minimum deposit amount. So, you can't just trade like $10 of some of these products. You have like the minimum transaction size is $100,000 or $1 million or $2 million. So, that really gates them, to retail for the most part. And then the handful of products that are available for retail to trade have exorbitant fees. And, people on Wall Street refer to treasuries as return-free risk for a reason. And so you've really got to be careful if you're a retail investor and you're taking a look at some of these products like OUSG, tokenized treasury bills. For me, what I would really like to do, over and above just gaining access to, on-chain digital treasuries, is I'd like to be able to trade the yield curve itself. So I want to trade knob spreads. I want to trade tut spreads. I want to trade, I just want to be able to trade the curve.
Well, let's dive a little deeper into this then, because I mean, there's a lot of good info here, and I was reading earlier. I'm hoping I can find it, but I believe that because these assets are being tokenized, a lot of those minimums that you were talking about are not going to apply.
Great.
And so, one thing that I want to point out is you got, the Circle, USYC, you got BlackRock's, Biddle Fund, you got Ondo's USDY, Franklin on-chain U.S. government money fund, Benji, Ondo's short-term U.S. government bond fund, OUSG, and that you can earn yield on. But one thing I want to point out is these products offer a few key benefits to holders. Like stablecoins, they are extremely liquid. However, stablecoins by themselves do not offer holders any yield, and potentially with a lot of this legislation that's going on, that's going to be hindered, whereas tokenized treasuries do. So it's exposure to the dollar, and dollar pegged asset, but it's almost like a loophole to where you can earn yield on, on assets that are pegged to the dollar. They can be traded and redeemed at any time, 24/7, as they exist on chain. They are backed by the U.S. government and managed by well-established investment management firms like BlackRock. They can be used as collateral in DeFi. That is the great thing about RWAs and tokenized assets, is it makes these illiquid, traditionally illiquid assets more liquid, so that you can take out loans against them. You can, do a lot of these DeFi strategies that we talk about here, that David teaches in his courses, to where you can, lever up your, the yield that you earn on, your liquidity by investing in these and then borrowing against them, taking that loan and, doing a borrow lend, looping strategy, or taking that loan, investing in another asset, and then taking out a loan against that. And there's all these different things that you can do because these assets are tokenized. So that is the big upgrade that these RWAs are offering. So David,
now Mike, so here's something interesting. Let's talk through this together.
Okay.
Could you bring that back up for a second?
Yeah.
I really want to take a look at that with you. So, think about this. How is USDC or USDT really any different than these bond products?
Exactly.
It's not.
That's why I mentioned that it's a workaround. It's a way to basically earn yield on your stables, and maybe that's what they're trying to do. Maybe they're trying to push people out of the stables and into these, and basically
these are essentially money market products. Is what these are. But then just think about,
they're having problems. The U.S. is having problems with getting people to buy their bonds. These auctions they've been buying their own debt because nobody's showing up.
Yeah, the Fed is being forced to monetize the deficit spending of the federal government because we have this problem with, entitlement spending. And, that's a topic for a different conversation. But
for the red
pill. Yeah, that's for the red pill. But, here's the thing. If Circle and Tether own treasuries and then mint stable coins, why is it again that they're not allowed to pay yield? Because those Circle and Tether are basically identical to what these firms are doing here.
Because nobody will buy bonds. Nobody will buy that stuff if they can earn yield on stable.
Right. So the buyers of the bonds would be Circle and Tether, or stable coin companies like that.
Yeah, to be in compliance.
Yeah. And so, I mean, look, if Circle and Tether could pay yield on USDC and USDT, which they should, there's no reason why they can't, aside from the fact that the big banksters in Congress are saying, hey, no, You can't do that because we've got a monopoly on that. And if you were to start doing that, then people would stop using our crappy, expensive products.
Well, there'd be a flight of liquidity. The liquidity would start leaving the banks, and it would start, funneling into DeFi, where instead of earning nothing,
where it belongs.
Yeah.
Where it belongs. Yeah.
No, it really does. It's more capital efficient. It's more liquid. There's more opportunity. It's run more efficiently. If a DeFi protocol doesn't work, then it goes away. Whereas banks, they want the government to use our tax dollars to bail them out. And what do we get for that?
Nothing.
We get charged fees, and we get the great honor of depositing our liquidity so that they can do fractional banking and lend it out multiple times and charge us for doing it.
Yeah, in my opinion, when I take a look at these money market products that have been launched by BlackRock and Ondo and the rest of them, I don't really see much of a difference between these products and like USDC and USDT in terms of the business model, what they're actually executing. The only difference is that Circle and Tether aren't allowed to pay yield on the stablecoins they mint. Imagine if you could hold USDC just in your wallet natively and earn the treasury rate, whatever that is, 3.5%, whatever. Well, then why in the world would you ever take a look at these, these on-chain treasury bond funds? Like there's no reason to, because if you're holding USDC or USDT and earning, let's say like the Fed funds rate or whatever, you're earning 3.5%. Okay, you can also use that digital product, that USDC, that USDT, to settle payments with finality instantly anywhere in the world. So that is the superior product right there. That's what we need. And the only reason why we don't have that, Mike, is because our Congress people don't represent us. They represent the banks, man.
Oh no,
so,
exactly.
Yeah, that's a shame. That's a shame. Bitcoin fixes this, Mike.
No, yeah, absolutely.
It really
All right.
does.
So the next up, we got Ondo network expansion. Ondo Finance has launched tokenized U.S. stocks and ETFs across 30 European states, allowing users to hold institutional-grade assets directly into DeFi wallets. So it looks like in partnership with Ondo Global Markets, New York Stock Exchange listed equities and ETFs are now accessible to millions of eligible users across Europe directly via the blockchain.com wallet. London and New York. Let's see.
Check this out, Mike. I'm learning about this right now as you were speaking. So Ondo Global Markets, they're expanding into the European market, right? And they're looking to really get a footprint in the European Economic Area, the EEA.
And 200 tokenized U.S. stocks and ETFs.
Yeah. So what's so funny about this? Isn't it true that as an American citizen right now, I am not allowed to trade U.S. tokenized equities, right? Yeah. But Europeans can? Like, dude, come on. This is like complete nonsense.
Yeah.
And so here, there's something about this Liechtenstein passport strategy. So it looks like in late 2025, Ondo received approval for its base prospectus from the Liechtenstein Financial Market Authority. So here's the thing. I just want everyone listening to just understand one thing. In crypto and DeFi, code is law. And what that means is you don't need approval from some Liechtenstein Financial Market Authority to build financial products. You just don't need it. Now, if you want your stuff to be legal in certain regions, according to the laws in those regions, then you probably would have to comply in some way, maybe, okay? Because this is like a parallel financial system. That's what it was supposed to be.
Yeah.
So yeah, there's this Liechtenstein passport strategy that is basically because Liechtenstein is part of the EEA approval. So Ondo went to Liechtenstein to get approval for its passport. And so that means that they were able to tokenize stock and ETF offerings across all 30 EU member states by getting the Liechtenstein passport. So that's the legal structure. But again, we're talking about a parallel financial system where code is law, trying to conform to and comply with ancient arbitrary legalese. Okay, so you don't need it.
Basically, a financial system that was structured to keep the power, keep keep
Right.
the liquidity, keep a stranglehold on the people. So
Right.
it's DeFi has the ability. If everyone in the world, and I'm just going to say, if everyone in the world just said screw the system, and we all started using DeFi, for our banking and for our investing and stuff like that, and just told those powers that be, if you want us to participate, you're going to have to comply with our with our system that we're building. It could happen.
Yeah.
It could happen.
I mean, yeah, I think what needs to happen is, because it doesn't look like there's ever going to be a relaxation of regulation globally at all, even in the best jurisdictions. So what needs to happen is people need to move away from denominating their assets in fiat. It needs to be denominated in Bitcoin or maybe in ETH. Like, honestly, at this point, I don't care as long as it's not fiat.
As long as it's something other than dirty fiat.
As long as it's not filthy fiat, then we're good. So.
All right, let's move on to the next one. We got about 30 minutes left. All right, so institutional forecasts. Analysts suggest Ondo represents a high reward infrastructure play, as the total RWA market potential is estimated to reach trillions by 2030. And I'm going to bring up rwa.xyz just so we can show you the chart on the rate of the overall RWA market. So here you go. So this, let me take the chat down. So this is, since we'll just say July 1st of 2023, this has been the rate of the tokenization of real world assets. You see that despite the pullback on the markets, Bitcoin, Ethereum, other alts, RWAs are up and to the right. Small pullbacks, but for the most part, this use case for blockchain technology is ignoring the bear market. The prices are another story, but the actual use case and adoption of this technology, the tokenization of stocks, bonds, commodities, real estate, you name it, any illiquid asset that you want to make liquid, is not slowing down. It's accelerating. So these are the things that you need to pay attention to and understand. Look down here at the volumes. This is massive.
It's just getting started, but it's just barely getting started.
27 billion is a drop in the bucket for what's coming.
Yeah, it's going to get so much bigger.
You need to be educating yourself. You need to seek out information if it's not from, and I highly suggest that you don't just listen to us, and definitely don't listen to.
I say just listen to what I say, and then you'll be fine.
but I mean, there's a lot of influencers out there that are going to tell you whatever it is that's going to get you to click and watch. We're not about that here. You might not agree with what we say, and by all means, please call us out in the chat on it if you have data to support what you're saying.
I love that. that. Like, I want someone to have an opinion contrary to mine, and then I want them to present the evidence and change my mind. Like, that's what I want, man. I want to upgrade my game constantly.
It makes us more knowledgeable. We're trying to make you more knowledgeable. Help make us more knowledgeable. Point out the flaws. If we say something and we're wrong, point it out. Show us, where it is that we're wrong, and we'll evolve. We'll potentially change our mind if the data supports what you're saying. That's what we're here for. That's what our community is about. It's not to endlessly shill the projects that we're bullish on, like most channels do. We're here to, as a community, to uplift each other knowledge-wise, in every way possible, to become better at DeFi, at investing, traditional and crypto. So make sure that you are putting using your time the most efficient way possible. Is it freaking snowing outside? You got to be kidding me.
Is it snowing, Mike?
It is. But use your time the most efficient way possible, and don't just get it in this confirmation bias to where you are seeking out information that only confirms your beliefs. Don't get in these echo chambers where people are just going to tell you what you want to hear, and you get all emotional if anybody points out anything negative about your project. David constantly points out, and I love using aerodrome because I'm so bullish on it, but he's constantly finding things about it that like the flywheel, that how it works for us, but how it can work against us.
Right.
And
You
if
gotta
we
be
have time,
careful.
I want to get your input on something I found on aerodrome. Not right now.
Cool. Yeah, no, I'd love to. So, Mike, it's snowing for you right now. It is. So for me, it is 85 degrees and sunny on the beach. And for you, it's snowing and it's still wintertime on April 1st. Dude, I love the extremes though. I love the snow and the mountains.
Oh
I
yeah.
love being on the beach.
Yesterday I went out to the island and I stripped down and was like working and cleaning it up down there and getting some sun. And but yeah, today it's snowing. So
yeah, man, that's awesome. That's awesome, dude. So what else we got going on here?
All right. So what we got next up, we got Chainlink global integration. Chainlink has partnered with the ADI Foundation to accelerate stablecoin and tokenization strategies across the Middle East, Africa, and Asia using its cross-chain interoperability protocol, CCIP.
CCIP, yep. Yeah, so I mean, look, that is very bullish. Chainlink is one of the most useful protocols in crypto and DeFi because they provide Oracle solutions. And all that means is if you need to get an off-chain data feed, let's say you need a price to be brought on chain so that your on-chain product can take advantage of that price. But that product that you need the price for, that product is not on chain, it's an off-chain product. Well, that's where oracles come into play. And Chainlink and Pyth, but Chainlink is the biggest one. Chainlink is the leader in Oracle solutions. And so what they're doing with this ADI Foundation, this is an Abu Dhabi-based nonprofit. And, those words don't necessarily mean anything good to me, if I'm being completely honest. So their goal is ambitious. What they want to do is onboard 1 billion people onto blockchain technology over the next 4 years. That's great. And they're specifically targeting the Middle East, Africa, and Asia. Okay, so that's great too. You know why? Because all of those people, there are a lot of people in those regions who are unbanked. And with all of the innovation in crypto and DeFi, you no longer need a traditional bank to become a banked individual, I guess you could say. So, Chainlink and ADI, they're focusing on designing stablecoins and RWAs for this region of the world. So this is really, really great. I think what Bitcoin and Ethereum need in order to really, really grow is adoption. And there can't be adoption if people don't know how to use this technology. So the fact that Chainlink and this Abu Dhabi fund are working together to bring, 1 billion people onto blockchain ledgers, over the next 4 years, that's phenomenally bullish news. That is really, really good. I think that really, so Mike, you're muted, but I think that really what we need is more adoption. In order for number to go up, we need more people using these products.
Well, and that's the key to all tech. It really what drives price go up. If it's Apple, if it's Nvidia, if it's crypto, whatever, any business really is it's adoption, it's customers, people using it. Google, it's 100% people using it. If everyone stopped using Google stock, it potentially could go down quite a bit. But I mean, they have so many other things going on with AI and stuff now that would prop them up. But back in the day when it was just nothing but a search engine, if everybody just stopped using it, its stock would go to zero.
Yeah. Yeah. And so it looks to me like, this partnership between Chainlink and ADI, they're also partnering with a bunch of regional banks. An example of one is this bank called M-Pesa. I guess it's Africa's largest mobile money platform. They've got 60 million users. So look, this is bullish, man. More adoption of this technology means more users on chain, which means potentially more value accrued to the coins that are the native coins of each of these chains. So if it's a public ledger like Ethereum, more users on chain means more value to ETH. If it's something like a digital commodity like Bitcoin, well, more people using Bitcoin, and that's really the important thing. People have to use Bitcoin for something. It's not just digital gold. You can't just hold it. If you just hold it, the chain will die eventually. But you need to use it for something. So more people on chain holding BTC and potentially using Bitcoin on a layer 2 like Lightning, or there are a lot of other layer 2s that are being launched on Bitcoin. So, more adoption over the long term, I think, means number go up. So very bullish news.
Absolutely. Absolutely. All right. So it looks like we only got a couple more, and then I want to touch on some aerodrome stuff. We might be able to fit it in. It looks like we got about 25 minutes. So proof of reserve standard. Major institutional platforms, including State Street and Galaxy, are increasingly adopting Chainlink's NavLink and CCIP to power tokenized funds with real-time verifiability. What are you seeing on that one?
Man, well, State Street, Mike, does anyone here in the call know about State Street? They are a really, really big firm.
They're right up there with BlackRock.
Yeah, they're one of those firms that like owns just about everything, or at least they have interests in just about everything. Galaxy Digital is, of course, a very, very big digital asset company, and what they're doing here is they call it sweep. Okay, so State Street, Galaxy On-Chain Liquidity Sweep Fund. That's a mouthful, man. So this is the sweep fund. So this fund is designed to solve a couple of problems for institutional crypto investors, namely this term lazy cash. So here's what this means. When an institution sells an asset on chain, the cash sits as a non-yielding stablecoin. And that's a big problem for institutions because remember, they are mandated by law, they're fiduciaries. And if they're just holding a USDC stablecoin, not earning any yield, their investors could sue them for doing that because they have a fiduciary responsibility to generate a return for their investors. So if they've got $40 million in USDC or $100 million in USDC for a period of months earning no yield, when they could have taken that $100 million in USDC and put it into some smart contract or some tokenized private liquidity fund earning 3.5%, and they didn't do that, well, that's a problem. So the solution here is this sweep fund, which automatically sweeps this idle stablecoin liquidity into a tokenized private liquidity fund managed by State Street and Galaxy. So it's using, oh, dude, this is crazy. It's using PayPal's PYUSD. So here's why that's crazy to me. If anyone out there has any experience with PayPal, as banks go, PayPal's probably one of the worst. They are horrible. And, just to see that State Street is using PayPal's PYUSD product as the primary vehicle for these subscriptions and redemptions, that doesn't make me feel good. I've used all of these banks, Mike, whether it's B of A or JP Morgan or Wells Fargo or US Bank or PayPal or I hate them. I hate them, dude. I really do.
When I had my emergency preparedness business, they actually, because I sold gun parts, like Magpul butt stocks and foregrips and stuff like that.
That's furniture.
It's not even guns.
It's not even.
They shut me down. Like they froze my account, shut me down.
Yeah, no, PayPal's really, really horrible. They're like the wokest of the woke banks.
They're pieces of shit. I'm just going to say.
They really are. And, So here's the thing. These institutions in the United States, they all suck, but some of them suck much, much more than others. And so PayPal, I would put it like at the very bottom of the totem pole, like the most suckiest. Okay. And then like, you got like US Bank barely above PayPal. And then, all the rest are just kind of meh. But yeah, so they're using this PayPal PYUSD product as the vehicle for subscriptions and redemptions into this sweep fund. And that's going to be good for institutions because they're going to be able to earn yield on their stablecoins. And Chainlink is providing this technical glue that makes the fund operational across all of these different blockchain ecosystems using their CCIP interoperability protocol. So look, this means that institutions are adopting these products. This is bullish long-term. This is good. More institutional adoption likely means more onboarding of customers. Now, does that mean that number go up for Bitcoin and for ETH? Well, maybe not, because you might actually start to see a siphoning effect of liquidity, where these institutions, they silo liquidity in their walled gardens. And that means that that liquidity can't exit and go onto a public. Yeah, it's about the liquidity. But if you've got all this siloed liquidity in a walled garden on an institutional chain, then that liquidity might not be able to bridge on over to a public ledger like Ethereum or like Bitcoin. So you might see a siphoning effect.
Well, that's why it's so important that to have these, this cross-chain liquidity, and that's what Chainlink's doing. That's what, a lot of this interoperability is for. That's why, I'm so bullish on, Aerodrome and, that news that we heard about Plume and, that full integration of Morpho. And, if there isn't these connections, then this liquidity can't move. And if the liquidity can't move, that's the same problem we have now. That that's the whole point of this technology, is to make the illiquid liquid and to reduce the friction of moving liquidity. So if it ends up getting bogged down or stagnant, then what's the point of tokenizing it and and making and putting it into stable coins and things like that? There's no point. You might as well just stay with the old system. So that's why I'm laser focused on these projects that are actually working together to create an ecosystem that aligns with overcoming these pain points or these issues in the traditional finance system. And with that, if you don't mind, David, I want to transition over into our last 15 minutes.
Mike, you're transitioning. I'm very disappointed, Mike.
Why?
Very disappointed. You're transitioning, bro. It's not good.
Why is that?
I'm just kidding, man. You don't get the reference. Transitioning into new content is what you meant. Yeah. Not the other type.
No, I'm not going to put on lipstick. I would look terrible as a woman.
You're not going to do that?
No. Yeah, I want to get your input on Aerodrome's new predictive allocation model. So I did some research, and so I'm going to read this to you, and we're just going to go through it for the last 15 minutes. So the predictive allocation model announced by Dromos Labs CEO Alex Cutler at it's going on now at ETHCC in late March 2026 is a fundamental shift in how decentralized exchanges distribute incentives. It moves away from the traditional vote escrow or VE model like Curve or the current Aerodrome V2 and adopts mechanisms similar to prediction markets. The core shift: static versus real time. The old way: weekly voting, Wednesday to Wednesday. VE arrow holders vote once every 7 days during the epoch. Emissions are then locked into these pools for the entire following week, regardless of whether trading volume actually goes there. The new way: predictive. Voting happens in real time. Participants bet on which pools will generate the most volume or fees. If your prediction is correct, you earn an outsized share of the rewards. What are your thoughts on that change?
I mean, look, it sounds great. No doubt about it. It sounds great. My question that I would love to be able to ask the team at Aerodrome about is what happens to VE Aero lockers? People that have already locked up their Arrow tokens.
I can tell you that.
Yeah, please. I'm curious.
So basically, the VE Arrow locks are going to transition over to S Arrow. So it's going to be staked. It's not going to be locked. They're going to be called stake or staked Arrow. So that's basically what's going to happen with those. They're doing away with that terminology of locks and vote escrow, the VE33, kind of structure or model.
Got it. Okay, good. I'm happy that they are. Now, it looks like you've got this core mechanism of anticipatory emissions built on top of this AER engine. So they call it the automated efficiency router, right?
Yep.
And they're using, moving forward, they're going to use predictive gauges. So instead of waiting for users to manually vote for pools that already have high volume, this model is going to suggest boosts for pools it predicts will see a surge in demand. That's interesting. I want to know, because in a traditional liquidity pool, when fees are generated, they're generated in the underlying assets. So if the Aerodrome DEX, if I'm a liquidity provider and I deposit 2 tokens into a pool on the Aerodrome decentralized exchange, and Aerodrome, maintains the infrastructure, right? And so when swap fees occur, those swap fees are paid in the underlying tokens. But then Aerodrome, instead of paying out those underlying tokens to liquidity providers, if you choose to, it can, but it pays out instead the Arrow token, which is their, inflationary reward token. So what happens to the swap fees in the underlying assets? Where do they go?
Are you talking about the yield that's earned by the new stake?
Well, no. See, what I'm talking about is, if I'm a liquidity provider and I deposit 2 tokens into a pool on Aerodrome, the swap fees are generated in the underlying assets themselves, not in Arrow. It's like Aerodrome is doing this
again. I mean, you can, and I don't know if this is going to change with the new platform. If there's still going to be that 10% fee, but you can claim your yield in the underlying assets, but you take a hit currently of 10%. But if you take your emissions, that's the fee. If you take it in, your yield in fees. Now, if you take it in emissions, then that's the Arrow token, and you get 100%. So you can, and then on the stakes, whenever they go to that staking model, they are coming out with the autopilot, and so you can actually take your yield that you earn on your staked, Arrow. You can take that and have it auto compound, or you can have it convert into whatever asset you want. Bitcoin, Ethereum, USDC, whatever asset you want. So you can use it to farm, dry powder, to build your Bitcoin bag, whatever. So, I'm really excited about the autopilot aspect, but sorry, go ahead.
Yeah. So that sounds interesting to me. Here, this is what I want to do, Mike. I think it'll help if I draw this. If I draw this out.
Are you going to share your drawings?
Yeah, I can draw things.
All right.
So check this out. Check this out.
Your name is Simon, and you like to make drawings.
Yes, I can do the drawings. So here's Arrow. Okay, so this is the chart of Arrow.
Yep.
Now, this is my question. Okay, you've got your liquidity pool, right? And inside the pool, you've got 2 tokens. Let's say that it's ETH.
Yeah.
Okay, token 1, and maybe a US dollar denominated stablecoin. Right. Okay, let's call it USDC. All right. You've got your 2 tokens in the pool. Okay. So I'm the LP, and I come in with my liquidity. I come in with my ETH and USDC liquidity into the pool. Now, when there are swap fees generated as a result of traders using my liquidity to swap ETH for USDC or vice versa, those fees that are generated, let's just name this fees, right? Those fees, I want to just make sure that we can understand this. I'm not exactly the best at drawing here, But liquidity in those tokens, the fees that are generated are in those tokens, right? ETH and USDC. But the Aerodrome DEX doesn't distribute unless you elect to receive these tokens as your fees. The Aerodrome DEX doesn't distribute these to you. Instead, it gives you Aero. So it gives you the Aero token.
Well, it depends. Like currently, it depends on what you opt in for. So if you have it staked, that means you're opting to receive emissions in Aero. If it's not staked, then it's just going to constantly build ETH and USDC.
Right, but you're going to make less.
Yeah, you're going to make 10% less currently. I'm
Right.
not sure what the new one's going to look like, but
so Mike, here's my question. Here's my question. So I totally understand that, but my question is, when you stake your LP and you earn Aero instead of the ETH and the USDC fees, what happens to the fees?
That 10% goes to what currently is Aero lockers, but and I don't know what it's going to be like on the new platform.
No. So here, let me jump in just real quick. I think that I want to just make sure that we're on the same page together.
Okay.
So if I'm a liquidity provider and I provide these two tokens to a pool,
you're getting your fees.
And then those fees are generated in ETH and USDC, but I've got my LP tokens staked.
Yeah.
So I'm earning Aero, right? But hold on. So here, stay with me. So let's say that the fees are generated in ETH and USDC, but the protocol is handing me Aero instead.
Yeah.
What does the protocol do with that ETH and USDC?
My guess would be that it's converting that ETH and USDC into Aero.
I don't think it is. I don't think it is. I don't think so.
Like I said, that's my guess.
Right, I know. But remember how people say that like Aerodrome is one of the most successful DeFi protocols that generates a lot of revenue?
Well, and 100% of the revenue goes to the people that are currently locking. That's going to be stakers.
So it must be that these fees go to VE Aero lockers in some way. Like, you see, the problem for me, Mike, is that this mechanism here is overly complex.
Well, like it says, 100% of revenue goes to the Aero, what's currently the VE Aero locks. So yeah, I mean, if ETH and USDC is being generated in fees, and that's I would guess that is being generated in ETH and USDC. Then if that is part of the revenue, then that's being paid to the people that are locking and that are securing the providing that liquidity that creates the deep liquidity for Aerodrome.
So let's see, we might actually be able to get a real-time answer from Gemini about this. This could be interesting. So just bear with me for a second here.
Right.
So if I am a liquidity provider.
Well, and keep in mind, everything that we're talking about right now is the current model that's about to change. So
Right, exactly. So if I'm a liquidity provider on Aerodrome, the decentralized exchange, and I provide liquidity in ETH and USDC, and then stake my LP tokens to receive Aero rewards, what happens to the ETH and USDC fees that are generated when traders use my liquidity to execute a swap? Do the ETH and USDC fees, where do they go? Where do the ETH and USDC fees go? Where do the ETH and USDC fees go?
Well, real
And
quick, while you're typing that, I'm going to answer this question. So, when does the very first 4 year period of unlocks begin? Actually, myself and the average period of locks is at 3.83. So most people that are locking currently are opting to stay max locked so that they get the most voting power to earn the most yield. So just because people locked for 4 years doesn't mean that all of those are ticking down to where there's going to be this massive amount of unlocks that happen at the same time. A lot of people, again, like myself, are opting to stay max locked at 4 years to maximize their yield earning. So, that's to me shows that the majority, represented by the 3.83, are long term bullish on staying max locked. So I'm sure you're ready. So what's up?
oh yeah, okay. So I thought that this was what happened, and this makes sense now. So when you provide liquidity, the trading fees are disconnected from the LP. So that's this VE33 mechanics, right? And when those ETH and USDC fees are generated by traders swapping against your liquidity, those fees don't go to you. Instead, 100% of those fees go to VE Arrow voters.
That's what I just said.
Right. So you're right about that. They go to the VE Arrow voters, and you get this Arrow reward token instead. Okay, got it.
So like I said, they're probably swapping it into Arrow. The dollar amount. Those assets are being swapped into Arrow and getting paid out in VE Arrow.
Right.
So I want to address. Yeah. Oh no, sorry. Go ahead if you weren't done.
Yeah. So it's that flywheel. That is the flywheel. So
Yeah.
the LP, you provide liquidity because you want to farm that newly minted Arrow. You don't get the trading fees. The traders, they want to use that liquidity to get really low slippage swaps. And I got to say, Aerodrome on the base chain is excellent if you're a trader and you want very, very cheap swaps.
Yes.
And then if you're a voter and you want to hold a VE Arrow lock. I know that that's going to be moving to something different pretty soon here. But if you're holding a VE Arrow lock, then you want to see the pool that you're voting on generate a ton of ETH and USDC fees because you want those fees.
Yes.
So that makes sense. That makes sense to me. Got it.
All right. And so I want to address this real quick. So he's talking about BTC Mouse is, and he's corrected this. It starts it there, and he's talking about the 4 year max lock. It starts there by default. They are not necessarily opting to do so, as you say. That is incorrect. That's my point. Is if you put it in the VE Arrow Maxi Relay, then the clock doesn't tick down. There's a disclaimer whenever you deposit it into the VE Arrow Maxi Relay or any of the other relays. It says by executing this, if like say that you were at 3 years on your lock, if you put it in there, it's telling you that you are resetting it to 4 years, and it's going to stay at 4 years as long as it's in there. Now, if you want that clock to start, that unlock to start ticking down, that's why you're getting the full voting power and the full earning potential. If you take it out of that relay, then the clock starts ticking down. That's how you get it to unlock. But currently, that means you have to manually vote each week. And so, again, all of this is changing. This is just the current state of things. So stand by to stand by.
So, Mike, I might actually buy some Arrow if I could get it.
I did it!
But only.
I did it! You heard it here!
But hold on. You didn't hear the rest of it. So I might buy some Arrow, bro.
That's it. That's where it ends.
If I can get it for like 5 cents, dude. Like if I can get it for like 5 or like maybe 10 cents, maybe, then I might buy some Arrow because
I'd just be happy if you bought $5 worth just so I got David to buy.
Well, Arrow. I mean, look, I know these DEX mechanics, man. I just I don't think that they work. So. Yeah.
Yep. Ellie, hurry! Shut the live off. No backsies. No backsies.
Yeah, hey, let it move to the downside by another 60%, then maybe I'll buy some.
No, and you know what? I'm not telling everybody. As much of a bull as I am on Arrow, please don't take that as me saying go out and max send on Arrow. If you do your own research and you like what you see, and and you want to buy a little bit for a moon bag, cool. If you are bullish long term and you want to stake it, the new model, awesome. If you don't, you know what? There's nothing wrong with that either. It's we're not here to try to get you to invest in what we invest in. There's things that David is bullish on that I'm not. There's things I'm bullish on that he's not. That is the point of this channel. It's not to find a place that is going to make you feel warm and fuzzy about what you're invested in. We're here to point out the positives and negatives about everything, to educate each other. That's what this community is about.
And we do a good job of it too.
Yeah, I think so. All right, detailed mechanics. Oh shit, we're out of time, but I want to hit this. All right, we're gonna go a little bit over. Do you have time, David?
Oh, of course I do. Always.
Okay. All right. Detailed mechanics. According to the announcement, the system is designed to achieve an 80% efficiency gain in capital allocation through the following features: asymmetric upside. Unlike the current linear voting system, predictive allocation rewards those who identify high demand pools before the liquidity arrives. If you allocate your voting power to a sleeper pool that suddenly spikes in volume, your share of the emissions and fees is amplified compared to those.
Bro, you can game that so hard. So like whales.
Explain.
Yeah, so like a whale coming in with big liquidity. So this is what you could do. You could seed a pool with like some random tokens. Maybe you create a new protocol, right? You got your new protocol. It's got a couple of different tokens that you launched. You seed a pool on Aerodrome, and then you go out and you stake a bunch of Arrow, and you vote on that tiny little pool that has no volume, and then you dump a bunch of liquidity into the pool, and all of a sudden you could really win on, I guess, getting the fees directed right back to you as the core S Arrow holder, right?
I would actually like to, again, I would love to get somebody from the project on so that they could address, because I don't have an answer for that. Because I mean, that's new, new functionality that they haven't released all the details. So I'm knowledgeable about the way Arrow is now, but I'm not on the fully knowledgeable, because it's not public information on how a lot of this back end stuff is going to work on the new stuff. So if anybody out there sees this, that knows somebody or is part of the Arrow platform, I'm talking to one gentleman that is pretty knowledgeable about coming on, and hopefully will come on next week. But I would love to have somebody from the actual team come on and address some of this, because I feel it's important if you want to give transparency and and actually educate people on your product. So the next thing is continuous reward streaming. Instead of waiting for the Wednesday epoch reset, rewards are distributed continuously. This allows the protocol to react to flash market events, a sudden depeg, or a virtual or a viral meme coin launch, by moving liquidity incentives to the necessary pools within minutes rather than days. What do you think about that?
I mean, I just heard the word meme coin and I got turned off a little bit.
Yeah.
Like, come on. Like, I remember the Solana casino, and I just don't think that that's a good look for crypto, the memes. But hey, look, it worked for some people. It worked really well for me, like on Fartcoin and Trump Coin. But for most people, it didn't work all that well. I really would love an opportunity, Mike, to talk to some of the guys at Aerodrome, because I've got questions about how this is going to work. Just learning about these new mechanics sounds to me like, anyone with some serious liquidity could game that system. And, that's
potentially, unless there's something that hasn't been announced that they're going to have, in the background, because I'm about to talk about AI and algorithmic integration. Maybe there's going to be an AI that going to somehow eliminate the ability to do that. I don't know.
It could be. It could be.
I'm just being devil's advocate, or
definitely could. Like I'm just now that I'm just hearing about these new mechanics for the first time in some more detail. I'm thinking to myself, well, what if I could use a flash loan within the same block, but it's on base? See, base has really, really fast block times, so you might not be able to do that. But isn't Aerodrome expanding multi-chain with this upgrade?
It's going ETH mainnet, any EVM
ETH
compatible
mainnet.
chains.
ETH mainnet, slow block times.
Yeah.
Slow block times.
Well, it depends on what pools you get into. Because what chain it's going to be on potentially. But yeah, let's. I'm going to keep trying.
But check this out, Mike. Check this out. So imagine you're on mainnet. You're on Aerodrome on mainnet, and you launch a new token. You call it a diaper coin. Okay, it's a shit coin.
Yeah.
And you seed a pool on Aerodrome with your diaper token or whatever.
Yeah.
And then you hop on over and you might be able to use a flash loan to gin up a ton of volume in that pool. Yeah. And then you could just stake a bunch of Aero. So you stake a bunch of Aero, you seed the pool, you use a flash loan to gin up a bunch of trading volume in that pool, and then direct all of the emissions to yourself. So,
well, I mean, one thing is, it basically you would have to, the amount of Aero that you would need to stake, in a lock, I think, might be a deterring factor for some, because,
probably.
Because once you put it in there and it's locked for, like currently in the current model, anywhere from a week to 4 years. So it's not something that you could really,
So you can though. I've exited locks prior to expiration.
Well, I mean, you could sell them
the unlock. Yeah,
you can sell them at a loss, and there is going to be a market, natively on the new platform where you can sell them. But what is the loss going to be? And is the AI going to say, oh, okay, well, I see that you're the lock that pushed, all that volume and, or that benefited from all that volume, and it identifies that as a bad actor. And maybe it's like, okay, well, there's some kind of penalty or some sort of fee, or I don't know. Like I said,
here's the thing. What I'm describing here is referred to as an economic attack. It's not necessarily like a bad actor. It's just, hey, you know what? Those are the rules that this new Aerodrome DEX has laid out for us. And within that rule set, if you can exploit those rules, I don't see what the problem is with that. Now, one thing that you would have to bake in is if you're going to use a lot of liquidity to stake Aero to get that lock to be able to vote on your own pool or receive rewards from your own pool, I would just bake in the exit into the play before running the play. So basically, like, if I know that I staked this Aero for 4 years to get the max power,
we're speaking a lot of hypotheticals. I mean, we're over time, and time is valuable.
I know. I'm just shitballing here.
No. It's just I hate I hate speaking in hypotheticals, because it's like we don't know what we're talking about because we don't know yet. And myself included.
Just spitballing.
Exactly. And it's good to do, but I know we're over time, so I want to make sure that we're use the most efficient use of our time. So AI and algorithmic integration. Cutler explicitly stated this system is built for the AI era of DeFi, agentic competition. It encourages sophisticated market makers like Wintermute and AI agents to compete. Market efficiency. Because agents are predicting where the best prices are needed, the DEX can create deep liquidity for markets that don't even exist yet or aren't currently large enough on centralized order books. And then there's the, okay, well, let's go ahead and address that, and then we'll get to the MEV capture and end it with that.
Maximal extractable value, MEV.
Well, no, the AI and algorithmic integration.
Got it.
Kind of what, are you able to bring anything up about that, or do you want to move on to the MEV capture?
Oh yeah. So let's see here. Tell me about the AI integration.
So,
I'm just
so it
gonna
says,
run it real quick.
yeah, so it says Cutler, I'll read it again real quick. Cutler explicitly stated this system is built for the AI era of DeFi, agentic competition. It encourages sophisticated market makers like Wintermute and AI agents to compete. Market efficiency, because agents are predicting where the best prices are needed, the DEX can create deep liquidity for markets that don't even exist yet or aren't currently large enough on centralized order books. So
Got it.
what did you pull up?
Yeah, so this is what I've got. They're going to use, a predictive allocation model. So it's not a chatbot. They're not integrating a chatbot.
Yeah.
They're deeply embedding a machine learning driven economic engine, okay, that they call MetaDex 03.
Yeah.
So that is their AI system. Now, what happens if that thing starts hallucinating? Because these systems tend to hallucinate a lot. So this is what the predictive allocation model does. It's a foresight engine and a live reward streaming engine. So like you were saying, Mike, rather than having to wait for the epoch to flip, the AI is going to trigger micro emissions to pools that see a sudden surge in demand. That's great. And then you've got this foresight engine that we were talking about. But you've also got, and I want to get to the MEV auction. So this Slipstream V3 now. So it was, the original Slipstream was concentrated liquidity. Slipstream V2, an upgraded version of that, and now Slipstream V3 with MEV auctions. So this is kind of like a little bit of a different solution to MEV than what Uniswap has proposed with their V4 hook contracts. So one of the most innovative AI features in this new MetaDex 03 is this MEV auction, right? So traditionally, arbitrage bots leak value away from a DEX by front-running trades.
And that's kind of what you were talking about before. It's a way that basically people gamed the system to suck liquidity out of the markets.
Basically, yeah. So if you could see the intent for a trader to execute a swap, you could use a flash loan. Yeah, you could use a flash loan to front run it and then back run it. So you could create a sandwich. And that type of maximal extractable value attack, that's called a sandwich attack. And it essentially steals tokens from the trader within the same block. So you got to be careful of that. That's why you got to use private RPCs and, use DEXs like Aerodrome that are going to protect you from that, or use Uniswap V4 hooks as long as you know what the hook is all about. So they're going to, on Aerodrome, capture and redirect those maximal extractable value fees, and they're going to redirect it as real-time revenue back to the Aero voters and the LPs. So this used to be a tax.
I got some information on that here whenever you're ready.
Oh, yeah, go ahead.
Okay, so there's three user types. There's the Aero voters, there's liquidity providers, and there's traders. So the impact of this kind of MEV auction is that for the voters, they can earn much higher bribes and fees by being proactive and switching votes as market trends change. Liquidity providers will see APRs fluctuate more rapidly, incentivizing them to move capital to where the predictive voters are pointing. And then traders get better execution and lower slippage because liquidity is pre-allocated to pools before heavy volume hits. So that's the upside of this. And then my understanding from listening to some recordings before is also in price discovery. So like new token launches, like the MEV auctions, historically, you see that when new tokens launch, that that initial spike, that volatility, where the price spikes because everybody's trying to get in early, and then you see the sell-off of VCs and the team members and whatever else, basically extracting liquidity for their investing and whatnot. But with these MEV auctions, my understanding is, and please correct me if I'm wrong, is that the price discovery happens before the token launches. So all that volatility happens before, and then it finds its what its price, its kind of natural, where it settles, and then you get the token launch. And there's going to be some volatility, but not like we've seen before, where there's just that massive spike, that massive dip, and then there's a slow trickle to where it kind of finds where the token finds its kind of its value.
Yeah, I think, Mike, my understanding of MEV is that it's disconnected from what you just described.
Okay.
I think that MEV is more like something that's structural, something that's baked in to liquidity provision and swapping. And I think that that's what Aerodrome is trying to solve for by, instead of allowing arbitrage bots to essentially steal tokens using MEV style attacks, Aerodrome is going to redistribute those MEV fees back to LPs and Aero stakers. So I think that it might actually be disconnected from the launch of a new token.
And it could be. I mean, it's quite a while ago that I watched that video, but I'm kind of looking it up right now. So Aerodrome is addressing the MEV tax on its users through a new system called Reflex, which is being integrated with Slipstream v3. Instead of trying to hide transactions from bots, which often just move the problem to private builders, Aerodrome is implementing what is essentially a protocol-level MEV auction. Here is the breakdown and how it works. Atomic internalized backrunning. The core of the fix is Reflex, a transaction layer engine. Usually when a large trade moves the price of Aerodrome, an external bot sees the imbalance and performs an arbitrage trade, a back run, to pocket the profit. The fix. Aerodrome now performs this back run atomically within the same transaction as your swap. The protocol itself rebalances the pool and captures the arbitrage profit before the external bot even has a chance to see the opportunity in the mempool. MEV capture and redistribution. The traditional model. MEV profits go to block builders and validators. In Aerodrome's new model, capture, the value that would have been leaked to a bot, is kept by the protocol. Redistribution. This captured value is directed back to the staked Aero voters and liquidity providers. This is going into the 80% boost in efficiency and all that, is my understanding. This turns MEV from a drain on the ecosystem to a revenue stream for its participants. Programmable sequencing. The syndicate partnership. As part of their 2026 expansion, Aerodrome is partnering with the Syndicate network to use custom block building logic. Filter mechanism. This allows Aerodrome to literally filter out toxic MEV, like sandwich attacks, that give you a worse price, while allowing healthy MEV, like arbitrage, and keeps prices accurate. You have something to say?
Yeah. So that's what I was just talking about. Those sandwich attacks, that's some of the most toxic type of MEV imaginable. And it's just such a great thing to see that Aerodrome is working to address that problem. Very, very happy to see that. No doubt about
it. And I'll add, I asked it specifically, what is the MEV auction fix that Aerodrome is implementing? And at no point did it mention anything to do with what I was talking about. So I must have been wrong on that.
Yeah, I just think that they're just different things. That's all.
No. I like I said, if I'm wrong about something, I have no problem admitting I'm wrong about it. And that's why I always preface things with, if I understood right, or if I'm remembering properly, and I like to double check. And
what's so interesting to me, Mike, about what Aerodrome is doing here is the different approach that the Aerodrome team is taking compared to the Uniswap team.
Yeah.
So the Uniswap team is telling people, hey, you know what? You can write your own V4 hooks, and you can write, basically create custom pool logic. That's very cool. The Aerodrome team is taking a more centralized approach, I guess you could say, keeping it all in-house and building it in the back end, kind of, sort of. So, different approaches to solving the same types of problems. Really, really interesting. It'll be interesting to see who ends up winning this battle. Maybe it'll be like the Dex wars.
Well, and I think that the Uniswap approach is more, obviously decentralized, and it allows the ecosystem and, I think, better innovation. I think that the Aerodrome model is going to be much more attractive to institutional investors and things like that, and people that don't have a lot of experience in DeFi, because the hooks, the V4 hooks on Uniswap, somebody can build out a malicious hook, and if you use that pool and there's a malicious hook, however they design that, they could extract your liquidity in different ways. So
you got to be careful.
You're going to have to be a lot more savvy, a lot more knowledgeable, a lot smarter in DeFi to navigate, those V4 hooks on Uniswap. But potentially, again, a lot more innovation, because you have, anybody can create a V4 hook, and it could be a good thing. It doesn't have to be a bad thing.
Yeah, I think, Mike, you might be changing my mind about Aerodrome a little bit here, man. What the hell's going on?
Right? Like the Hadron Super Collider, like it took us into an alternate reality, or what's going on here?
I don't know. I guess the way that I think about this is I think out, into the next bull.
Yeah.
So it looks like Aerodrome isn't going anywhere, and they're going to be around, and that means that Aero token is going to be around. So when I take a look at the charts and I see, okay, Aero trading for, just above 30 cents, something like that. Yeah. 32 cents. I think to myself, well, if I could pick some up for maybe a third of that, like 10 cents.
Oh, absolutely.
That would make sense to me, just, to play it for the next bull, because I've got to think that at some point or the next bull, there's going to be some hype wave around Aerodrome. There always is,
Well, I mean, look at it, how it's positioned, and this will be my closing thoughts. Look at how it's positioned. Its relationship with Coinbase, it really is becoming the liquidity hub for a lot of crypto. Ethereum mainnet, EVM compatible chains. You got ARC from USDC, Circle. You got Optimism. All these different chains that it's now going to be on. Massive amounts of liquidity, even just being on base chain. In a lot of ways, it's outperforming Uniswap already on Bitcoin based assets, and it's the volumes and the amount of liquidity that the pools have, and so I don't know, just having that way of onboarding people, that the removal of the barriers to because of its relationship with Coinbase. Love or hate Coinbase, you've got to take emotion out of this. That is going to be the way that a lot of people, especially in the US, are going to be onboarded to crypto and DeFi. It just is. And the one click or a couple clicks, that ease of use, that again, remove those barriers to entry of needing to understand how wallets work, what a hot wallet, a cold wallet is. The nervousness of, did I send it to the right place? The right address? Is it going to show up? Being able to, just navigate the complex ecosystem of DeFi. All of that is going to be stripped away. Simply, you use your debit card, credit card, you deposit your fiat on a Coinbase, and you're going to be able to look at your assets, your portfolio, and okay, yeah, I want to take a loan out on Bitcoin. Click. Okay, I got a loan. I want to put that into some liquidity pools, or I want to put it into this vault, or I want to invest in this. Click. Oh, look, I can loop. They have where I can do advanced strategies. I want to do, and and it tells you, and this is stuff that I'm kind of guessing right now. That
I'm pretty sure this is in the works, though.
No, absolutely, and that's what I'm getting at, is just being able to just see and have it give you the data. It's like, oh, okay, well, if you loop twice, the kind of the calculators that David has already built. If I loop twice, this is my risk. If I loop 3 times, in a borrow lend, strategy, this is my risk. This is, my liquidation level, whatever. And it just has that in a nice, clean, neat dashboard for you. And you can assess, is this within my risk, acceptable risk parameters? And then it gives you a whole portfolio of, you have this much in high risk, you have this much in medium risk, this much in low risk. All of these things is what I see personally what Coinbase, Aerodrome, and Morpho are building out.
That's
my 2
Mike.
cents.
I agree. We can end on that, man.
Yeah.
I agree 100%.
So that's what I see. So anyway, I appreciate you all hanging out for 2.5 hours with us while we went through all this. But David, as always, I deeply appreciate all your insights, because I love soundboarding off of you to, as like a reality check sometimes. So
yeah, just go back and forth, learn as much as we can about all of these new protocol upgrades, and see where the alpha is. There's always a new opportunity out there somewhere.
Absolutely. Appreciate you all. And please, here in 5 minutes, if you want to join Jeff, he is going to be doing a deep dive into a new project. And what is it, Wednesday? I think that's it for today. I don't think we have an evening show on Wednesdays.
Nope, I don't see it. We got the Red Pill tomorrow, though, and I'm going to be starting live coaching with Ellie tomorrow. That's going to be a lot of fun.
And we have Dagnum PI. So tomorrow's a big day. So on the node, we're going to have Dagnum PI on. We'll have Jeff doing a blockchain report. Then David and Ellie are going to be doing the first episode. Well, he'll do his market wrap up, and then him and Ellie are going to get her started on David's coaching, coaching program. He's going to pull back the curtain, show you live what it is that he does in his coaching program, and then if you want to get drunk with us, smoke it if you got it, and get unhinged. You got the Red Pill at 6 p.m. Pacific, 9 p.m. Eastern. And I want to give a shout out to frickin' Arena. We got over 60 people watching there. Appreciate the support over there. You guys are awesome. You guys and girls are awesome over there. So appreciate it. And until next time, Veteran Crypto out.
Peace.